Hello, and welcome to another episode of the Seasonal Tokens Podcast, where Polar interviews people so you can do more investing and less gambling.
How do you think a person can do more investing rather than gambling in crypto?
Take it slow to begin with. Be very methodical. Think about what you're buying and what your exit is. You don't have to think, well, I'm going to sell it when it gets to this price. Think about what you're going to do with that token. If you're just going to buy Bitcoin and sit on it, fine. There's nothing wrong with that. There's nothing wrong with being simple. There's nothing wrong with doing it easy. Do you want to leave it on exchange because you want to trade it? Again, nothing wrong with that. Work with a trustworthy exchange. Do your research. Look at the ratings. Start off with 100 quid. You are not going to miss out in the matter of hours or days, or maybe even weeks, if you're doing something of a long-term strategy. If you're trying to get into a token sale very, very quickly, maybe ask yourself, why are you trying to get into it so quickly? Is it a fear of missing out, or you think it's a genuine opportunity? And just peeling back some of these layers of immediacy that crypto can offer people can usually lead you to a much clearer answer. I was invested really deeply into ICOs back in the day, no ifs or qualms, and I was just still starting out. I held something like 250 tokens at one stage, and the amount of Ethereum, I don't even want to know the amount of Ethereum I bought to cover all those gas fees back in the day. Like, there's probably a calculator somewhere I can go and do, but I'm not really interested in putting salt in that wound. And tracking those many tokens took so much of my time, and I think I was very lucky to get out at the end of the ICO boom with definitely not at the top. No one could have called that top, but I think I got out of the majority of those tokens with some sort of profit. And all of that profit went into starting Coinbase. I was one of the original liquidity providers for Bitcoin and Ethereum because I just put my entire portfolio into the platform. So I think, that immediacy, which probably isn't even a word, I apologize for that. That immediate effect of getting in now versus missing out is something that is probably the biggest thing people need to work on, I think.
Perfect. Really nice. And you have been investing so much time. I'm sure that you have tested different investment strategies. So is there one investment strategy that you have found that worked the most for you during all these years?
I'll say two. One's a very boring one. One's a little bit more advanced. Definitely very boring dollar cost averaging, buying 20 quid a week or something like that. 20 quid a Bitcoin or 20 quid a ETH or whatever it's going to be. Dollar cost averaging in, same as any other normal investment, takes a lot of stress out of it. I don't look at charts every single week unless I'm doing something different. Trend following, maybe not on the bot level and just putting all of that reliance on tech. You want to follow a 50-day moving average or a 200-day moving average, then that's fine. It's very technical, but you can make it simple. But then on the other side of my portfolio, as I call my alpha portfolio, where it's there to make yield, it's not there to make token capital value, stuff like market making on the DeFi side. So, putting some USDC into a liquidity pool for swapping. There's more and more and more decentralized apps now relying on decentralized liquidity to make their application work. And the more of those that come out, the more reliance on that liquidity, the more trades that happen, and all of that's really healthy for the market. If I can leave an amount of USDC and USDT embedded into these liquidity pools, then I'm always going to get paid. So there's a number of really good DeFi apps out there. I won't recommend them here because they're borders on financial advice. But saying, could I put £500 into Bitcoin and wait, or could I put £500 into a DeFi pool and make a 6 or 7% return? Allocating funds into different areas of crypto is a very healthy way to be active in the space without being over leveraged. And now I have different expectations for both of those portfolios. And I put a bit of time in kind of every week to kind of keep my eye on it and kind of see what's either new or underperforming or whatever. But the one thing I don't have to ever worry about is obviously the security of those tokens, because they're always in my possession. So I use my ledger. I have a number of Ledger Nano S's, and if I can't keep the token on there, is it something for me I want right now? Am I happy to leave that on an exchange? But there's a lot of really cool tech that's come out where using it's called Wallet Connect, and you can connect into DeFi protocols using a ledger instead of having to rely on. There's nothing wrong with MetaMask, but the way that you generate that wallet and then secure the keys can be a problem if people aren't really, really up on their laptop security and their other security protocols, etc. So, I have an expectation for each portfolio, whether it's very boring dollar cost averaging on Bitcoin and ETH, or if I'm doing something more active on the DeFi side, they have different expectations and different ways that I get paid. And I think that's probably how I would answer that.
Really nice, really nice. So right now we are in some sort of a bear market. So I suppose you're continuing doing Doorcast averaging and also yield generating. But if someone is just starting out and he doesn't have your experience, what you would advise him to do during these bear markets?
Podcasts, reading, and still being active. Just because prices are down doesn't mean, I think everyone can scrap together 100 quid to try something. And I think trying and doing is way better than theory. The theory of, I can go and do this and do that. And I would have made, I did in quotation marks here, I realize I'm on video, but quotation marks, I would have made £1,000 there. You can't think like that. That's a fear of missing out. It'll lead to a poor decision in the future. Actually doing, even on a small scale, will prove a concept that you can get into the market, get out of the market, pay a few fees, and, not put too much emphasis on losing. Because if you do a small test now with £100 and you learn something, then that's the cheapest bit of education you'll ever get. Putting £1,000 in a project that gets rug pulled, or you lose your wallet, or whatever it's going to be, those are very, very expensive mistakes, which will kill your confidence. So I always think that, doing rather than talking about it is always going to be more profitable long term. Even when I've got a brand new wallet and I'm doing a very, very large transfer, whether it's for, something within our operations that I need to approve or moving capital between my own wallets, I still do a test transaction of a couple of quid and just pay the fee. Trying to save £1 on gas fees versus losing £1,000, just pay the fee twice. It doesn't matter. And I think that I'm always still building up my own confidence, even though I've been doing this for a very long time now. Not the longest, definitely not, but there's always something to learn. And I think if you're constantly improving and constantly learning, that's the way that you're going to succeed in this kind of market, being able to take the losses as well as the wins. And I kind of relate this a lot to one of my other pastimes, which is poker. I play a bit of online poker. I play a lot of live poker, but that's strategy. That strategy and reading people and looking at the cards and doing the math. And you'll never be the best at it. I'll never be the best poker player. I'll never be world class, but there's always something to learn. And that's what I kind of like about it. It keeps my brain active, keeps the creativity active, and there's always some form of entertainment you can get from that as well. So I think being active and doing rather than just talking about it or reading about it, even in a bear market, is, I think, the best way to protect yourself long term. Or best way to do something in a bear market instead of sitting around doing nothing and just looking at the charts thinking, what if?
Yeah, and hoping for the best.
Yeah, hoping for the best is not an investment strategy.
Yeah, but a lot of people are actually practicing it. So,
it's same as you get real deep on it and you get back to an emotional layer of investing, because there is some emotion involved when you're doing this. No one's coming to help you and make the decision for you. You have to make that call, whether you want to put that 100 quid or that £1,000 or the whatever in. You want to mortgage your house and put it all on Bitcoin, then no one's going to tell you wrong. Your bank might have something to say about it, but you have to make that call yourself. And I kind of, if I have a problem making a decision, I will literally step back for 10 minutes, an hour, a day, and think about what the decision is and what it actually means. Am I FOMOing into this? Am I hoping it's going to go well? Or is there 1 or 2 or 5 outcomes that I'm completely prepared for? And it may be overthinking it a little bit, but one thing I can always say is I've been very confident in every move that I've made, whether they're winner or losers.
100% agree with you about this one. And one thing that I wanted to add to what you were just saying about the thing that it's better doing than just only reading and analyzing is that I'm also against practicing that much on demo accounts. For me, I have noticed that there is a huge difference in trading in demo accounts to active real accounts. So I totally agree with you that you have to do it in the real world, not in a playful area.
Yeah. Yeah. It's the same as a business. If you've got a business and it generates no revenue, is it because you're treating it like a hobby? If you put hobby amount of effort into it, you'll get hobby-based results. If you're treating it like a business and having a strategy, it's your capital that you're putting into it. And where did you get that capital from? From your time at your job, which you may or may not enjoy. But that capital is not going to grow itself, and no one else is coming to help you. So if you want to peel it back to a really, really raw layer, it comes down to that. You can practice as much as you want and build your confidence up, but you need to make a decision eventually. And you might decide it's not for you, and that's fine, but you've made a decision, and that's the best bit. Not doing and not deciding is effectively going backwards, in my mind.
Yeah, in my mind too. So It has been an amazing interview, and I'm really happy to have you here. But I think that we are close to 50 minutes or something like that.
Great.
And I'm trying to keep my podcast episode not that long, even though it's very, very hard, especially with guests like you.
Yeah.
So do you have any final words to our listeners?
Like our very simple marketing campaign, get crypto confident, surround yourself with the right media, surround yourself with a community, whether you know the people directly or it's in a Discord channel, and talk about it. Get involved. Don't treat it like a hobby. It's probably my best bit. And just, be active when others are inactive. Follow the Rockefeller Carnegie bit. There's blood in the streets. There's money to be made. Be greedy when others are fearful. Be fearful when others are greedy. And, try and split your emotions out from the most of it. Don't have a hope-based approach to investing and trading. Have a strategy and stick to it. And the strategy will play out to one of your goals, whether it's a winner or a loser. Just be prepared.
Perfect. Really, really nice. So thank you very much for being a guest, Jeff. It was an amazing pleasure to have you here. So after the recording is over, you can share with me all the links that you want to share with the listeners.
Just drop me an email. And when those tweets go out, just make sure you tag in our social media links, which I give you, and we'll echo those out as well.
Perfect. So thank you very much, Jeff. It was really great. So thank you very much to all that have listened to this episode and have reached to this part of it. It's an amazing pleasure to have you here. So if you enjoyed what you have heard, please make sure to subscribe and share the episode with your friends. I'm Paul, the CMO of Seasonal Tokens, and I'll talk to you on the next episode.